Hey, what's up, guys? It's Abdel Khawatmi. We're going to go over today our market update, going over what is happening as we've seen over the last several days when we take a look at just some of the market transitions, right? So, first thing we're going to take a look at is just obviously how is the market transitioning when we talk about labor, retail. So, taking a look at this, pending home sales is up 1.5% month over month. Retail sales up just 1.7% total. We can obviously see a big part pent up buyer demand. Of course, some of the geopolitical stuff that's happening overseas with some oil. The biggest reality of it, right, is just demand is outpacing supply. We're obviously seeing a lot of forced spending, not growth. So we got to keep an eye on obviously how inflation is doing and just some of the changes we start seeing about employment. You can take a look at here pending home sales, right? Where we obviously saw just a slight uptick, like I said, month over month, a little bit of a downtick of less than 0.1% when we talk of year over year. Current pace, we're at 3.98. So you'll see in this picture, right, we're seeing top right, on the East Coast, as most of us are there, we're seeing a lot of gains, as opposed to on the West Coast, a little bit of a slowdown. Retail sales up 1.7%. What does this mean? The headline, obviously, it just hasn't really impacted the market. We've been seeing rates kind of flat over the last 2 weeks, right? But consumers simply, again, are just paying a little bit more on oil prices, which is obviously bleeding some of that categories, right? Initial claims, also, when we take a look at, unemployment, 214,000, and obviously continuing jobs continues to remain super elevated. You'll see here, right? When somebody loses a job, they're either going to a gig, right? We're like a part time, or they're collecting that unemployment benefit, right? Some of the stuff again that we take a look at housing. Obviously, we want more homes. That was one of the things that we pushed for when we were in Washington D.C., pushing for obviously home growth. Retail, obviously, budgets are squeezed, right? When we take a look at that stuff, and then of course the biggest part, unemployment and labor. We're obviously seeing mortgage bonds a little bit of room to improve. We're seeing 10-year go down. So remember, when mortgage bonds go up, rates go down. When 10-year treasury goes down, rates simultaneously also go down as well. So some things that we want to look at again for this week. On Tuesday, tomorrow, we're going to get Case-Shiller and the FHFA, how home values have been progressing. Policy meeting begins, and then again, the rate decision on Wednesday for Fed. Is the Fed going to potentially cut, or are they going to keep things in the status quo? Then a big part on Thursday will be that PCE report, personal consumption expenditure report. This is the Fed's favorite measure on inflation. Okay, a little bit of a hack for us to take a look at, but again, two main things we want to look at on Wednesday: the Fed's decision, and then obviously on Thursday, PCE report. I hope this was helpful. Obviously, if you guys ever need anything, please feel free to reach out. Talk to you guys soon.